in 2021, it really is the year of the vaccines, and we're seeing this vaccine rollout. Now, it's not even around the world. The UK and the United States are doing very well in terms of vaccination, so is Israel. Continental Europe is lagging behind. I think Asia is lagging further behind that. But I do see, our pharmaceutical companies have done a very good job in creating vaccines which are safe and effective as far as we can see. And this does seem to be having an impact on the mortality numbers already. And I think they will have an impact on crushing the pandemic over time. You don't need everybody to take the vaccine to crush the pandemic. I mean, personally, I jump at the chance to take a vaccine because of what the pandemic has done to us all. But there is a large number of people who now have some immunity because they caught the disease. And in both Europe and the United States, the combination of those who have immunity from catching the disease and those who have been vaccinated will, I think, cause the pandemic to wind down. So in the United States, we think it will wind down over the course of the second quarter. By the time we get to the 1st of July, it will be pretty much, I think, beneath the surface. I think it'll take a little longer in Europe and a little longer in Asia. But by the end of the year, I think the whole world will be coming out of the pandemic. And that will lead to a very natural, strong surge in economic activity. All the service sector activities that people have not engaged in, I think they will engage in. So we're looking at a very strong rebound in the global economy, particularly in the United States. That does mean higher interest rates, it means higher profits, but it does, I think, have profound implications for the investment environment, because it's quite a different investment environment this year, obviously, from what we saw last year.
Naturally. But from the conversations I've had with some investors and some of our clients and audience, it seems as if because this impact of how coronavirus has impacted the markets, it's been very different to how other global events have impacted the markets. You think back to the Great Recession and other financially caused financial fluxes, whereas this is a whole different dimension of risk because it comes from the health sector, something which investors don't have expertise in. It's the doctors that really have take the lead on how we will come out of this. So being that is the case, this blind spot in understanding what the future will hold, do you think we've seen sort of a wait and see response from a lot of people, or have in your point of view, have people been aggressive in taking advantage of the unpredictability?
Well, I think, recessions, if you remember the opening lines of Anna Karenina, it is that all happy families are happy in the same way, but all unhappy families have a unique way of being unhappy. And I sort of feel the same way about recessions. They're all bad, but they're all different. And this one is perhaps the most different of all. And that does mean that from a modeling perspective, for example, I've run a macroeconomic model of the US economy for the last 25 years. It's really hard you have to manhandle these equations and these series in order to try to come up with a plausible forecast of what's going to happen, because there is no past experience in modern history of how a pandemic affects the economy or how the recovery from a pandemic affects the economy. But I do think that professional money managers are not waiting to see. I think what you have to do is think logically about, okay, what the pandemic did, but then let's look at the disease, let's look at the vaccines, let's look at the path, let's think about how industries will react to this, let's look at fiscal policy, monetary policy, and you build a framework, a most likely scenario for how things are going to work out. And particularly if that involves dramatic change from where you are, then you do want to put your money where your mouth is and make investments while the opportunity is there. And I think in many ways, that's why the market bounced back very strongly last year after the pandemic hit, because I think a lot of professional investors took a close look at how bad the pandemic was, but also the large chunk of companies that would be able to get past this, and also the fact that there is an end date to this thing. If you make the bet that the biotech industry will come up with vaccines, then you know that this is a book-ended recession. It starts with the virus, it ends with the vaccine, and that's not usual for recessions. You can't usually, usually you crawl out of recession. This one, we're going to bounce out of the recession when the vaccine is fully deployed, and that's so we basically had to put that into our models and try to figure out what all that means for markets. We couldn't wait to see what happened, because then the markets would have moved ahead of us, and we'd have missed out on some good returns.
If you'd like to hear this interview in its entirety, then head on over to SoundCloud, YouTube, Spotify, Apple Podcast, or any other major podcast platform and search Four Corners Podcast.